Hello class, this is the second video for chapter 2. With this, we're going to continue with the problem. It says on December 1, NetSolutions paid rent for December for $800. So the journal entry will say December 1. Rent expense will be debited for $800. Cash will be debited for $800. Don't forget the 53 is a reference to the 53rd account, and 11 is a reference to the cash account. So accounting equation impact is right there on the bottom. Cash decreases. We're taking out cash to pay our rent expense, which is a debit, which is an increase. Okay. Moving on, transaction-unearned revenue. So we will record that. It is a liability. So December 1 cash, we did receive the money of $360, but we're putting it in as a liability because we haven't received the payment yet. So it will go under unearned rent, $360, and don't forget 11 is the cash account, 23 is the unearned rent as well. And right below it is the note. Make sure to put notes in there so you know what it's for. Received advance payment for 3 months rent on land. So that note is important. Transaction, let's see, accounting equation impact. Again, we just went through this: a debit for cash and a credit for liabilities. So this one, this is December 4th is the date. We're gonna debit office equipment, which is account 18 for $1,800, and then we're gonna credit accounts payable for $2,100. Keep in mind, make sure you indent the second entry or the credit entry, and then again the note, purchase office equipment on account, and then again we did debit office equipment because it increased for us, and we also increased the liability as well because we put it into a payable. On this particular transaction for advertising, again we put the date December 6th. It is a miscellaneous expense. Sometimes these little expenses we put them under miscellaneous. It'll be account 59, and let's see, it'll be $180, and cash is going to decrease, which is account 11 for $180. And again, it says paid for newspaper advertisement, and that's a note. And what happened, the impact is right there on the bottom. Decrease cash, increase miscellaneous expense. On this account, we paid $400. This is on our account payable. On December 11th, we're going to pay account 21 for $400, and it's coming out of our cash. So whenever you see a cash and there's a credit, that's going to be a decrease, or cash went down. Paid creditors on account. So decrease in cash down on the bottom, the impact, and decrease on our liability. In this particular wage example, on December 13, this goes under wage expense as a debit, which is account 51, and cash is going to decrease for $950 and paid 2 weeks wages. And then that same example is down at the bottom, the impact on the T account. So for this next one, received fees. So this is our cash is going to go up on December 16th, account 11 for $3,100. And our fees earned, account 41, is going to also be credited for $3,100. And don't forget, this is a revenue, so this goes in as an increase. So they both increase on both sides. So when a business agrees that a customer may pay for services provided at a later date, an account receivable is created. It is a claim against the customer, and it is an asset, and the revenue is earned even though no cash has been received. So you realize it when you do an exchange of service or product. In this example, $1,750 in account receivable on December 16th. And account receivable is account 12. Fees earned, this is a revenue, so it's going to increase $1,750. And on the bottom right there in the notes, we put, this is the note again, fees earned on account. The impact on the accounting equation is right below. Next, we look at paid creditors. On December 20, accounts payable of $900. It comes out of our cash account. Account payable, account B, account number 21. So our cash is going to decrease by $900. The impact is right there on the bottom. Cash decreases, accounts payable decreases as well. So for this example, December 21 cash for $650, accounts receivable, we received cash and then we are decreasing the accounts receivable for our customer. As the note says, receive cash from customer on account. Now, when you have multiple accounts receivable, you'll put note which account you need to credit and where the cash came from. Again, this is just on the left side. Cash increases, the account receivable decreases. It's basically a swap. So when we take a look at supplies, our supplies is going to increase on December 23rd, account 14, and our cash is going to decrease for $14.50. So purchase supplies, again, that's an example of double entry accounting, and the impact is right there on the bottom for each T account. This next example on December 27th, wage expense again. So in wage expenses, account 51, we're accumulating all the wages we've paid of $1,200. Our cash, or account 11, is going to decrease by $1,200 because we paid cash for 2 weeks of wages. And on the impact on the accounting equation, decreasing cash, but an increase in wages expense. Again, paid a phone bill again for $310, utilities expense, December 31st for $310, and then our cash also went down for $310, and the note says paid telephone bill. Impact on the equation is right there below. You can take a look at that. So on the 31st of December, we paid our utilities again, electric bill, account 54. We paid $225, and that's going to be debit. Our cash is going to go down $225, and our note will say paid electric bill. So always a debit and a credit. You can't have two debits. If you do, you did something wrong. This particular one example is going to, on December 31st, we received cash for $2,870. Our fees earned is going to be a revenue, and it's going to be $2,870. Received fees from customer, and the impact is right there on the bottom. Increase cash, increase revenue. Now this next one says December 31, accounts receivable, because it says on account 12 for $11.20, fees earned for $11.20, and then fees earned on account. So basically what's happening is we're getting money for the second half of December. Paid dividends. So dividends for $2,000 on December 31st. Dividends will be account 33 in this particular example. Cash decreased $2,000, and this directly comes out of stockholders' equity. So just keep that in mind. A decrease in cash, increase of dividends, okay, on those T accounts. So here's a general ledger for all of the accounts that we did. There's the cash account, there's the accounts receivable, there's supplies, everything is dated. There's account prepaid insurance as well. And let's look at the next one. Those are all totals. Here's another next general ledger: land, office equipment, accounts payable, unearned rent, common stock, and dividends. Also, these are the contra accounts, and these are fees earned, wages expense, supplies expense, rent expense, utilities expense, and miscellaneous expenses. So it's basically, the general ledger is keeping track of each of your accounts. So the equality of debits and credits in the ledger should be proven at the end of each accounting period by preparing a trial balance to see if your balance in your T accounts equals, or your ledger equals. So to do that, the first thing that you need to do is list the name of the company, the title of trial balance. Looks like it's the ledger. List the accounts from the ledger and enter their debit and or credit balances in the debit or credit column of the trial balance. Total the debit and credit columns of the trial balance, and then verify the totals of the debit column equals the total of the credit column. So it's just seeing if the debits equals the credits. In other words, it's a built-in checks and balance. So an unadjusted trial balance is distinguished from an adjusted trial balance and a post-closing trial balance. The latter two are prepared in latter chapters and included different. So basically what that's saying is we'll get that into another chapter. So the trial balance, this is what it'll look like. As you can tell, this is the example that we just did for NetSolutions. So 42,600 does equal 42,600, and those accounts are listed on the left there, account number, debit balances, credit balances, and notice this is NetSolutions unadjusted trial balance, December 31, 20, whatever. Okay, they equal is what we want to check, is do they equal. Errors, a transposition occurs when the order of the digits is copied incorrectly, such as 542 as 452 or 524. Okay, in a slide, the entire number is copied incorrectly, one or more spaces to the right or left, or right or the left, such as writing 542 as 5420 or 5,420. So it's just a way of checking that, make sure that you did the double entry accounting. Just double entry allows you to make sure that you are entering these correctly as well. But there's multiple built-in balance where you'll check if they're equal. Errors not affecting the trial balance. Errors that do not cause the trial balance totals to be unequal may be discovered when preparing the trial balance, or may be indicated by an unusual account balance. For example, since a business cannot have negative supplies, a credit balance in the supplies accounts indicate an error has occurred. So what that means is, in your T account, if you have a negative, then you did something wrong. If an error has already been journalized and posted to the ledger, a correcting journal entry is normally prepared. So those are definitely done. Assume on May 5th, 12,500 purchase of office equipment on account was incorrectly journalized and posted as a debit to supplies and a credit to cash for 1250. So the error was discovered on May 31. Before making the correcting journal entry, the journal entry was made in error is compared to the entry that should have been made. So, and comparing the two journal entries, the correcting journal entry can be made. So we just have to go back and make an adjustment at the end whenever we find it. So here's what happens. Cash supplies 1250, cash 1250, and then journal entry should have been equipment 1250, cash 1250. So the equipment and the supplies is where the incorrect was. So then the correcting entry is right there on the bottom. So we got to pull out the 1250 out of supplies, so we're deducting it, but we're putting it and debiting into, on May 31, debiting office equipment because we're putting it into the right account. So that's the correction on the bottom. So let's see. All right, I think this is another, we'll go ahead and bypass this example. Checkup, analysis for decision making, horizontal analysis. So in horizontal analysis, the amount of each item on a current financial statement is compared with the same item on an earlier statement. The increase or decrease in the amount of the item is computed together with the percent of increase or decrease. Again, when two statements are being compared, the early statement is used as the base for computing the amount and the percent of change. So we'll take a look at that in more detail. I know this is just words, but I need to see it. So hopefully there's an example. Here we go. So here's what we're looking at for year-end December 31. So we're making a comparison from one year to the next. So 2016 was 150. 2017 was 187. So that was an increase. Our wages also increases, our rent increased, our utilities increased, our supplies decreased, and our miscellaneous expense increased. So our total expenses are $92.50. That was an increase. Our net income, though, was higher. Our net income was $95,000 as opposed to $79,200. So overall, there was an increase of $15,800. So that's the horizontal decision making. Again, don't forget, accounting is always about decision making. And sometimes as a board member or external user or management, you look at these and say, well, okay, what's going on here? Why did our utilities expense increase by 38%? That was our highest increase. So then we would ask whoever is in charge of paying those, and we take a step deeper to try to make sure to find out what's going on. So those are always good reasons to look at a horizontal analysis. So that's the end of the presentation for Chapter 2. If you have questions, please feel free to email in Canvas and let me know. Not Canvas, Blackboard. Sorry, I use Canvas at San Juan College. But email Blackboard. Let me know how I can help you. I'm here to support you through this accounting journey. It is a fun journey if you like numbers, if you like systems. So let me know. Have a good day.